Good morning, everyone, and thank you for joining us. I'm Barclay Hagan, the Director of Client Care for OnPoint, and this morning we have Linda Whitener presenting Sage 300 CRE Job Cost Closing Procedures. If you have any questions, please enter them into the questions section of the GoToWebinar control panel, and Linda will pause throughout the presentation to answer those. And with that, I will hand it over to you, Linda.
Thank you, Barclay, and appreciate everyone showing up. And as she says, we're going to be going through the Sage 300 construction and real estate job cost closing procedures. And so what we want to learn today is how to manage job costs and the profitability on your jobs with getting timely, accurate closing procedures done. And we're just going to go through some of the things that you can do to accomplish that. So why is that important? You want to have your job cost module correct and everything updated through the month that you're working on closing, because it affects your WIP report that's in job cost plus your financial reports that's in general ledger and being produced. And we want to make sure that the cost of sales accounts agree to what's in your job cost. And that affects the costing plus the revenue, and then they can do their forecasting information based on that WIP report. So first of all, to understand some of the file structure, just to get everybody up to speed on that if you're not aware of it. We have master files out there, and those, an example of that would be the setup, which when you go into anything that says setup or maintenance, it's only static data. So it's the job name, it's job number, of course, maybe who's the project manager. It does have buckets in there that accumulate the cost, but it's just a snapshot in time. That's what's everything that's posted against that job right now. It can't tell you when that cost came in. It just knows this is what it is right now. So an example of the master file is the setup of the job. And then the other type of files, data files out there, are the transaction files. And that's where you would be doing tasks of any sort. So that is specific to, like, if you take an example of direct cost, you are entering information to a specific job, to a specific cost code and category for a dollar amount, and it also has the accounting date on it. So it's very much in detail. It knows what it is, when it got there. So when you produce reports, you either have a report that is directed off of master files, looking at the static data, or you have reports that are off of transaction files, and that's off of each individual transaction. And when you have that kind of report, it usually asks you, you can say for a date range. You know, I want to know from May 1 to May 31st, what kind of cost hit the job. That is always, it's off of the transaction files because it's being very specific. So then the different types of transaction files, you have a new, which are anything in there that is unposted. And that's why we want to always watch our new files, and you might also see them as a new.jct because that's the job cost transaction file. And that accumulates everything that is not posted in there. Once you do a task post entries, then whatever it can post, it will move it into the current file. So there, it's everything posted and it's hit the job master file and updated the information that's in there. Then we also have a history file, and that is more of a archived file. You can have it in a different data folder if you want to, but it can also reside in the data folder with your live company files in it. And you actually have to tell it move from current to history. And then you also give it a date range for what is it that you want to move. One thing that does is speed up any kind of reports. So when you run a report on a transaction file, it has to go look through everything that's in that, which file you chose, like the current file. And so if you have things in there for 20 years and keep building, it's going to take a long time. So, on at least a yearly basis, we move from current to history, and moving anything out, say that's older than 2 years from the end of the fiscal year, and keep 2 years worth in the current file. But if you need to go back to gather any information that's that older stuff, you can tell it to select the history file also, and it'll all come onto that report. But for normal day-to-day processing, you usually don't have to have anything that's that old in your report. So where does the data go when you're making any kind of entries in job cost? So your application of origin is job cost. That's where you're making these entries. And so that might be entering direct cost, or if you still use job cost for doing billings and cash receipts, or any kind of miscellaneous worksheet entries. Whenever you type a line in and accept that line, it's going into the new.jct file, which that again is not posted. So after you tell that to post, it moves those transactions to the current.jct. And then it also updates your master file, the master.jcm. But it also, if it's necessary to, it sends the information to general ledger. And so it'll send those entries to the new.glt. And if it's the billings, or I'm sorry, if it's the cash receipts, then it also has to send that money to the bank. So it'll send it to the register.cmt for cash management transaction file. So whenever you post, it just kind of spreads it out. And what it does with it when it sends it over there to the new file in general ledger depends on what your settings are in job cost, if it will try to go ahead and post itself or not. It might sit there and wait for you to go over there and post it. And if you move stuff, then it'll go from the current.jct over to the history.jct. That's the only thing that's happening when you do a move. And so why does all this matter? Just understanding that previous slide, you can hopefully understand a little better how to fix if something went wrong. And also we want to promote best practices in your workflow. And part of that is if you do have some errors, how are you going to fix them? And one of the main things that we always try to stress is that if there is an error, always go to the application of origin where that error was made and at least make an attempt to fix it there. An example of that is if a AP invoice was coded wrong. Well, fix the coding on that invoice and it will send out changing entries. I wouldn't try to do a direct cost entry and change the coding on it, because when you look to AP, you're saying, oh, well, this was coded to that job and that cost code. And then, but then in reality, you went over in job costs and changed it. Well, that information doesn't hook together. So you'd have to be looking at everything to be able to tell where did it ultimately end up. So we want to do some best practices on how we fix errors. And we also want to make sure that job cost stays in balance with the general ledger cost of sales accounts. And we'll be doing some reports or looking at them to check that out. So a process on doing a reconciliation, the first thing that you'd want to do is ensure that all entries are posted, and that is for job cost and general ledger. And mainly if there are some things that are not posted, but they're for the next month, we're not worried about those. We're worried about transactions for the month end that you're closing and prior. All of those need to be posted in both job cost and general ledger. For data verification, there is a close month validation report. And what that does, it compares the master file, which is the static data, and its buckets to the transaction file. So let's say that you did a posting, and in the middle of that post, the power went out, and maybe some kind of glitch happened in there. So it actually posted the transactions, but the power went out and then it didn't get to update the master file. We want to make sure that both of those things are in balance with each other. And if you look at whenever you close the month, there is a validation report that comes out um, that lists every single job. And if it has a bunch of dots and then it says job in balance, then it's fine. That job is in balance. The transactions and the master file are in balance with each other. But if there is one that's wrong and it might say, you know, job cost is out of balance and it'll give you the dollar amount, there is a report that we can run called a closed month validation report, and we can run it on those specific jobs to find out where is it out of balance and get that corrected. Then there's also just a JC summary report. It's always easier to look at things in summary than in detail. And so at that point, if everything here is in balance. And there's probably one other report that I'll show you on this one that I like to run. If everything is in balance here, then you can skip to step number 7. If not, then you'd have to go into more detail. And some of those reports would be the job cost totals by batch, job cost general ledger totals by batch, and then some of the causes, just some unexplained entries out there in job cost. Um, Unexplained, we'd have to see what those are to find out why are they in job cost and they're not in general ledger. There's also unposted job cost transactions. So if you're trying to balance job cost to general ledger and it's posted in general ledger but not in job cost, well, you're never going to balance. So that's why we need to make sure that all the transactions are posted. And then if you override an account, because by design, usually your cost of sales accounts in the general ledger match up to the category. And so you have your cost of sales labor, cost of sales material, subcontract equipment. And so by design, that is set up in job costs that way. But if somebody goes out there and would override that, then it's going to get out of balance. And so we don't want to override what is out there by design. And so just if you find something and you fix it, then you just keep repeating the steps until everything gets in balance. Some of the period end reports is the GL reconciliation report and then your WIP report. And the WIP report would be run when everything is in balance. But this GL reconciliation report, by original design, it is detailed. I usually make a summary version of that. And this is the one I was talking about that I like to run to make sure that job cost is in balance with the general ledger. And there's on the reconciliation desktop, there is a list of common causes out there and they run you through those different ones. We can take a look at that. And this is the one I was talking about here, AP invoice coded to a job cost GL account without a job number. And the job cost direct cost entry with the default accounts overridden. So by design, if it labor is supposed to go to 5,100, but somebody changed it to go to some other number, it's going to be out of balance. So a few tips and tricks like for y'all to be able to think about is that job cost only post 1 month into the future. And so that's why we want to keep job cost going and closing the month in job cost, even though general ledger is still open. They're holding the other modules open for whatever reason. You don't have to, and you don't want to hold job cost open because it will stop posting entries. to job cost. Let's say if it's in May right now and we're fixing to go into June, it will post all of June's stuff. But if you keep job cost in May and you get into July transactions, unless you move job costs forward, it will not post those July transactions. So your job cost reporting will be incorrect. And job cost is not strict like general ledger about posting to prior periods. If, we keep it moving along, and usually I tell everybody it's fine to close the month in job cost the same time when you close the month in payroll, just so that it keeps going. Everybody knows they have to do the one in payroll. So just add job costs to that, because you might be in June for the month in job costs, but then somebody enters something for May. When it goes to job cost, it's going to post. It's not like that prior month is closed, so that it doesn't take entries. It will take it and post it. So we want to keep job cost month up to date. And also make sure that the reports you run for the month end are based on transaction files and not the master file. Because some people might have some reports designed off of the master file. Yes, they are easier to design, but it's just not good for month end closing because of keeping job cost up to date. We want to be able to say, cut off everything, billings and cost and everything as of the end of a certain month. And the only way you can do that is when it's written off of transaction files. So any kind of master file report, somebody can look at that and design it to be based off of transaction files. And I know it's a short class, but I do want to get into the software real quick. So to recap, what we have talked about is timely and accurate closing procedures. We want to reconcile to the GL, and just a few little tips and tricks. So Barclay, was there any questions that were out there?
I do not see any questions at this time.
Okay, thank you. So I'm going to go over to the software real quick so we can look at some of these things that I was talking about. So some of the reports, this one is the GL reconciliation report. And this is the one, it's my go-to one, the first thing that I run when I'm looking at closing a month. And what you want to do, first of all, you're going to make sure everything is posted. But I think this is back in 13. So the main thing is all you want to put up there is the month that you're closing. You don't want to give it account numbers, batches, nothing, just the dates. And hopefully this will run pretty quick. So this one is all of the entries for cost of sales materials. And so it's saying, oh, that's the end of the report. So there wasn't much that happened. Let me change it back to May, see if there's a little bit more activity. Okay, there's a little bit more activity. So here's labor, and see it's all of the transactions. And so here's the total. So what if we did this as a summary form, you would see the cost of sales labor, and then you would see this total. And as long as this total is what general ledger says, for cost of sales labor, then you're in balance. Because this one is 21,5001, this is 10,5001. So you're looking to take this GL account and make sure that that number is in there for the monthly activity. But as you can see, this would be a lengthy report, with all of the transactions. And that's why I make it a summary report. Then if you're not in balance and you have to go to the detailed one, that's fine. You can go to the detailed one. Another item, and this was not in the PowerPoint, I don't think I added it, is if you are out of balance, look at the general ledger inquiry account for one of your cost to sales accounts, whichever one might be out of balance. So like this one here, oh wait, sorry. Let's take materials. So the current period activity is $8,800, and that's what that other report, the total that it should have on it for your cost of sales material, this account specifically. If it doesn't, first thing I do is come here to the general ledger, double click on it. It has all of your transactions out here, and you can condition it to say that the job is equal to blank, which means it has no job number on the transaction. What you want to see is this right here, that there aren't any transactions out there. Because in your cost of sales accounts, there should be no transactions that don't have a job number with it. But if you had them, then it would list them here, and you'd want to research, well, did I do a journal entry to fix something, or is it just really just an entry that shouldn't be out there? It should be coded someplace else. But that is usually one of the number one causes that people code directly to this account, and they shouldn't be. Okay, so that was that one report there. There's under reconciliation is all these reports. So here is that close month validation report. If when you close the month and you look at that report, and a lot of people just let it go to a print file and they don't even look at it, which it is telling you some important information. And this one here, depending on what it tells you is out of balance, one of the main things we're concerned with is the cost. And so we could run this report and we could condition it to a job, whatever job it's telling us that is out of balance. So across the top, this is the job record, the extra record, the cost code, and the category. All of these come from the buckets on the master file. But what it's comparing itself to is the totals of the transaction files. So here, this one is in balance. that one's in balance, that's in balance. So we want what's on the master file to be the same as what's on the transaction record. So let me just, I was trying to see, get down to the end of one of these jobs. Because at the end of the job, it does give you totals. Let me go down to it would be totals like this. So here is what's on the job record, what's on the extra record, the cost code, the category, and the transaction record. So you can see that all these are all jobs right here. This is a report total. So the transactions do agree to the category records, and those category records roll up to the cost code record. And then have to look at these 739. So, then this is a regular job, and then that's the extra total. And so when you take those two and add them together, 9.5, 9.5. So yeah, I just did the 1.095 and the 7,500. And so that comes up with the 103. So these jobs are in balance. But if you had a job that on that closing that it said that it was not in balance, then somewhere along in these numbers down here, they would not be in balance. And then you would go up in this report in that job to see where these don't agree, the transaction and the job to date cost. Somewhere it would be off. So then, look through these other reports there for reconciliation. And then there was on the additional tools, the reconciliation. There's some stuff in, oh, so I was thinking mine's not working, but there is some job cost, and they have a listing of the errors, what could cause the out of balance for job cost. And as you can see, additional tools, there's other workflow centers out here. A lot of people don't know that they're there, but you can do a lot of things right here for job cost. So it's like 12:04. We went a little over, but I hope that was helpful in at least getting started on a easy path to reconciling job cost with your general ledger and doing a good month end. So Barclay, I will give it back to you.
Okay, thank you. And thanks everyone for attending. If you would like additional information or if you have any ideas of topics that you'd like to see us cover in the future, we'd love to hear from you. You can contact us at 877-213-3860 or clientcare@onpoint-software.com. Also, to keep up to date with new resources and upcoming events, you can follow us on Facebook, LinkedIn, and subscribe to our YouTube channel. Everyone have a great day. Thank you.